Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Friday, October 6th, 2006, and the market's just closed. I've got the MidCap SPDRs on the screen right now, symbol MDY. And while the media has been talking about the Dow Jones all week, I think the single most important thing that occurred for the market's overall health this week was the recovery of these mid-cap stocks. As you know, I've been concerned that about them potentially breaking down. And looking at the weekly time frame, you can see why we'd had that uptrend line that was broken, and then it looked like a bearish flag. Now it's still below that trend line, which it would have been nice to see it get back above there. And like I said, take out the high from earlier, a couple months back in July. That hasn't occurred. That's really going to, once it does that, then I'll become a lot even more bullish about that. And that's this high right here at about 140.80 or so. Anyways, the important thing here is that we had another successful test, the second one in the last 2.5 weeks of that rising 50-day moving average, and now we've really got an upslope to it. So again, that puts the sellers on the defense, and this market is innocent till proven guilty. Most importantly on this market, though, I think, and what it accomplished this week was closing above that 200-day moving average. To me, that's a key psychological event. You can see that we've had increasing volume on the rally, followed by a little bit of a pullback today. Nothing to be concerned about on lighter volume. Now, what would concern me is if this little rally fails to hold, and then we find ourselves back down in here again next week. Right now, it's not looking like that, so let's not read too much into it or try and create a bearish argument here, because the action is quite bullish in a lot of stocks. Now, looking at a 10-minute time frame of the mid caps, what we saw here, and I'm going to point this out again, is typically we get support at the short term, then intermediate and longer term moving average. These moving averages start to crisscross, and that represents indecision. Indecision comes after a period of either a rally or weakness, and it typically occurs at short-term turning points. Now, it doesn't mean this market's necessarily going to turn lower, because obviously you can see here that we've got higher highs, and hopefully, as long as we can hold maybe above 138 or so, I think that 5-day moving average is going to be important early next week. If it can hold above that, near 138, then we'll continue to give the benefit of the doubt to the buyers here. But overall, it was a great week, and that's what we have to focus on, is that there were a lot of great plays this week as well, and we happened to catch a lot of them, both long and short, actually, which was one of the bigger winners was actually a short sale, and that was quite pleasing. I'll talk more about that in the next video that we'll have the stock ideas that we've been previously mentioning. Here I've got the Nasdaq 100 on the screen, the QQQQ, and let's take a look first at that weekly time frame. I already drew these Fibonacci levels in just to kind of show that the 61.8% retracement is supposed to act as resistance if it's a pullback. However, once it surpasses that 61.8%, then according to Fibonacci analysis, that it's not that this downtrend has officially reversed. And it also came again at the level where we've had this prior level of support that was supposed to act as resistance. But like I said yesterday, the market laughed at that level at 40.40 and continued higher. So buyers are definitely in control here. We've had a great rally, and there's no reason to think it can't continue higher, but the market is extended. So as usual, we just have to keep one eye on the exit, have those stops in place, and let the market action dictate what we should be doing here. Again, this market this week bounced off that 200-day moving average and also the intersection of that 20-day moving average. So a great week for the buyers, for the bulls in the Nasdaq 100. All around, you take a look at the SPDRs, SPY. And I shouldn't say all around because we're going to get to that in a moment. But the SPDRs here, a little consolidation today. That's all we have going on. We're seeing these moving averages cross over on the 10-minute time frame. So it tells me we need to consolidate a little bit. We'll keep an eye on this 134 level because it's the 5-day moving average and prior resistance from last week as well. But the market gapped down, and actually it recovered fairly nicely, I thought, today. Maybe setting up a little inverted head and shoulders pattern on the 2-minute chart. Who knows? Let's not read into that too much either. But overall, again, a positive session. It closed, close to the highs for the day. So I think that the market continues to act good, and that buyers stepped in and took advantage of lower prices, and part of that might be short sellers in trouble. The Qs, I want to just point out, go back to them for a moment on the 10-minute time frame. Then we have the same thing. We have moving averages crossing over in here, and short term, this is the level of support 41.22. Breaking below that, we'll probably go for a test of the 5-day moving average, I would think, at a minimum. Now let's take a look at where the potential problem is. The group, like I said yesterday, to worry about, and that's the semiconductors. The semiconductors, I've already got this drawn in there as well because I was just doing a little analysis earlier on. Let's just erase those and start over, though. Here's the negative part. The negative part is we've got a 200-day moving average that this market is still below and hasn't been able to get back up above. The second negative is it's been making lower highs. Now for the positives, it's got a rising 50-day moving average and it's sloping up very nicely. We've also got higher lows. So what does this mean? It means that we're consolidating and it's building this little triangle in here. Once it breaks out in that triangle, then we'll know where the next move is going to come. My feeling is just a hunch. Doesn't mean anything else other than that. Market doesn't pay based on my guesses, but I think it's going to break higher and continue with the rest of the market. Otherwise, that could be the catalyst for the whole other argument that I don't want to go down that road.